Hey, good morning. This is Mayor Valensky with Driving Markets. Driving while talking about markets. Hope you're well. Okay, I've heard got a lot of messages. Where's the daily driving markets? Are you not doing a video today? You're not doing a broadcast? What's happening? So it is between obviously the holiday season of Hanukkah and Christmas and New Year, and I did take a break, but you know what, for the sake of the audience and the sake of the viewers, let's just have a quick catch up overall where we're at and have a look of what's likely to go happen in 2023. Remember, anything said in this piece is an opinion only, okay? It's not for financial advice or investment advice. We get it wrong, we get it right. Let's kick off. So I want to focus a little bit on Tesla. If those who are Tesla traders or Tesla investors, I'll try and cover as much information as possible. Remember, I've been calling Tesla down from $230 a share. Again, for those new viewers and those new subscribers, I want to make it clear I'm not anti-Tesla. Okay, I actually love Elon Musk. I think he's probably the number one CEO in the globe, in the world, okay? However, Tesla has been under pressure for lots of reasons. One of them was the Twitter trade, which cost 44 billion plus. By the way, 44 billion is only the price of taking it over. It's not the price of redeveloping and relaunching. So that's going to take huge amount of resources. Also, there's production issues, and now they've got a problem selling the latest models of the cars. Added all together, I came in and I said, you know what, Tesla probably will fall from 230 to 150, okay? Now, at that moment when I said it's going to fall from 230 to 150, I got a lot of pushback from a lot of people, a lot of subscribers, a lot of viewers. Also, I put it on Instagram and obviously on TikTok, and that caused a big stir because a lot of Tesla loyal shareholders don't like it when I say that Tesla is going to fall. Again, I've got nothing against Tesla. It's just that you've got to look at something and say, okay, where's it likely to go going forward? What's going to drive that share up or drive that share down? And it's a very hypersensitive issue because those people who are sold on or addicted to Tesla or just don't want to hear any bad news. They don't want to hear any anti on Tesla. I think Tesla long term is an absolute fantastic share. Okay, so if you want to buy it and stick it away and look at it again in 10, 20 years, you'll be, wow, it'll be absolutely amazing. At the moment, I called it down to 150. And then when it got to 150, I said, you know what, I think it's going to go down to 130. And then we got to 130, I think, wow, I think we're going to 115. And it's come all the way down. Last night it dropped below 110 to 109, and it's running about 113 now. So where would Tesla go from here? Well, now that China's reopening up and reopening production, you'd expect Tesla to rise further and obviously, just trying to stabilize the camera because I'm driving, and obviously have a better run. At the moment, I don't think so. I think the Twitter deal is going to suck in all its resources. So probably looking at about the $95 to $100 level in January or February on Tesla. It's a very tight call because it's come down so much from 230. So there's a high risk there that it might not touch it, but it could go down to 95, 100. Not 100% sure. So those of you who are going to trade, remember that's an opinion only. Okay, moving on to the rest of the markets before we focus on a couple of things, is overall generally the markets were down. Then there's not going to be a Santa Claus rally, which is a rally before before Christmas and before the end of the year. The end of the year effectively is today with a little bit of trading tomorrow. So unless the markets absolutely burn forward or shoot up for some unknown reason, then it's unlikely we're going to have a Santa Claus rally, and as a result you're going to end up with the year on a significant down overall across the board. And that significant down has been on the high-tech sector, it's been on the crypto sector, it's been on and energy sector has also gone down this year. A lot of pressure overall on the speculative stocks. Okay, so the speculative stocks have taken an absolute hammering. Also the SPACs, those special purpose acquisition companies that were the big flavor of the last 5 years, where high-tech companies or companies would use the back door to get into the NASDAQ by not fully qualifying for the NASDAQ. They'd use another company that's already on the NASDAQ and they piggyback on that, or another company that fulfills the requirements of going on the NASDAQ and they piggyback on that. Those SPACs, which were really popular, and a lot of people, a lot of investors and traders have put in huge amounts of millions and millions into these SPACs. They've lost between 95 and 98% of their value. So that is huge amount of money just gone. Also, looking at foreign exchange, let's focus a little bit on the dollar. The dollar's had a fantastic year. I mean, it's gone from the doldrums in January, where interest rates were running at 0.25%, 0.25%, and the general consensus of opinion was that that's going to be the case for the next 20 years. There's no chance of rates going up. And then I came out on Driving Markets and stated categorically that rates are going to go up. That also caused a huge backlash and a huge pushback from investors and traders and analysts. Said, what are you talking about? Absolutely no way, not in a million years. They might go up by the end of 2022 to 1%. I said, absolutely not. In January, February, I was calling interest rates in the States at 3.5% by the end of 2022, and then by March I said they're going to go to 4.5% by the end of 22. In 2023 rates are going to go higher. Probably by July you're going to see 7% interest rates in the US. So the dollar's going to continue rising in 2023. Not necessarily against all currencies though. This year it's gone up against all the majors and all the minors. Next year there will be some selective currencies that will push back and fight back on the dollar. One of them I suspect is going to be the pound. The one that I think is going to get extremely weak is going to be dollar yen. In other words, I think the yen's going to get really weak. I think we're going to see the dollar yen in 2023 at around about the 155 level. Yes, for those Forex traders, we're going to probably see dollar yen at about 155, probably see the pound at about 125, 127 in the first quarter. Can't really look further than that, but we're going to have dollar strength in the first quarter of 2023, in my opinion. The euro is in a shocking state. The only reason why the euro is up there is because Christine Lagarde and the ECB have stated that they're going to be quite aggressive on interest rates in 2023. So that's held up and that's pushed up the euro to about 106. It doesn't really need to be there. It shouldn't be there. It should be, we're talking about the euro dollar now, yes? So it should be around about the 95 level. I expect in the first quarter 2023 for euro dollar to be around about the 95, euro 95 to the US dollar. So that covers more or less the majors. Going on to cryptos, again, Bitcoin's going nowhere. Everyone said, oh, it's stabilized. It's stabilized because there's no activity in there. The investors don't want to go long at this level. If they did, then they would actually go up. And there's been too many shocks in 2022. There's been far too much going on. There's been far too many bankruptcies, far too many liquidity issues, and far too much speculation that the money is going missing. Can you trust the platform you're getting involved in? So Bitcoin, I did call it down from 68 to 30, and then from 30 I called it down to 20, and then from 20 I called it down to 15. It did touch earlier last month at about 15.8. It's now running at 16.5. Will it fall to 15 by year end? I've got 1.5 days really to prove that it will be below 15. Could do, to be fair and objective, it's probably unlikely. So I missed on the last prediction, getting down to 15, but we were more or less right in the rest of the year, getting it down to these levels. 2023, probably see it come under pressure again and will fall below 15,000, and I expect it to go below 10,000 by mid-2023, purely on the back of the lack of confidence in the sector, and it's overrated, and it is a binary. Okay, that means that either it's going up or it's going down. It's got no fundamentals to it. There's nothing really there driving it, purely apart from supply and demand. There's no company behind or profitability or PE ratio. There's nothing at all. So expect cryptos and especially Bitcoin to come under further pressure in 2023. As far as commodities is concerned, gold will probably go up. It's reached 1815, 1820. It looks like it wants to go higher. If it goes above the 1820, stays there, then the next level would be 1950 in the near term, up to 2000, the big psychological level 2000. 2023, as I call gold, at around about the 2400 level, and silver around about the $29-30 a shot, okay, an ounce. Regarding oil, again, oil got right in the beginning, but then later in the year got it wrong. Called it 120, 120, kept calling it 120. It's come all the way down to 78, 82, 85. It's going to be supported by OPEC. OPEC's not going to stop supporting the price of oil by cutting production. So you're going to have production cuts throughout 2023, so OPEC can keep the price up there at $80 to $90 a share, $90 a barrel. Unless there is a major crisis, which I can't foresee one, but who can, then oil will probably hang around these levels longer term, okay? I can't see it at the moment going to 120 because I can't see any particular engine or factor that's going to drive it through to 120. So it's probably going to hang around by the $85, $90 level. Bonds. Now, European bonds have shot up. The yields have shot up, which is an onerous sign that rates are going to shoot up even more in Europe. And that is following on from the US Treasury, which is also going up. The US Treasury has moved up from the low, I think it was 349 or 344, 3.44, I can't remember exactly, but it's moved up to 375, 380 and higher. It's going to go up to around about the 4.5, 4.6 level, and there is a massive inversion between the 10-year US Treasury and the 2-year US Treasury, which is causing, which is a lead indicator. It's a major sign of a significant recession. Now, the recession is going to come in 2023. In my opinion, it's going to be very, very deep. It's going to come in worse than 2008, and you need to be prepared for that. There's going to be layoffs and unemployment, and obviously as companies' earnings drop, then you're going to have more and more companies that are going to lay off staff. It's already started in 2022 and it's going to continue into 2023, and that's what's going to be a major factor on corporate earnings and obviously affect share prices as we move on. Which other sectors have I not touched? I think I've touched most of them. Commodities, FX, shares, Meta. I can't leave driving markets without mentioning Meta. Meta is, as far as I'm concerned, I just can't bear it. I just don't like Mark Zuckerberg. But I have to be objective. Meta is a profitable, or Facebook is a profitable company, but they're just blowing all this money on the metaverse, and I'm calling it down all the way continuously to $70 a share. It's going to go to $70 a share, or even down to $50 in 2023. Yes, it's going to go down to $70 and even down to $50 a share in 2023, and it is possible that it could go bust if it continues fighting and investing in Meta, which is a complete and utter waste of time. Then the next one is Apple. Can't forget to mention Apple. Apple have called down to $100 a share in 2022. Hasn't reached there. It's down to 126. I'm still sticking to $100 a share on Apple in 2023, or at least in the first quarter. I can see Apple dropping significantly. Worrying concern is China. China has got huge cases of COVID, out of control, and America is considering going back to 2020 and putting a block or restrictions on travel to China and from China. If this COVID kicks off and has a major impact on the rest of the world, then we're going to be in trouble. But besides that, I don't think so. Anyhow, so I want to wish all the subscribers, all the viewers, for following me, commenting. I wanted to keep on subscribing, keep on following. I will do some studio work. I'll try to develop and invest more time and give you what you need. We're going to do some live streams also on driving markets. I'll publish it on the WhatsApp groups and on the actual the broadcast when the live stream is going to take place, so you can actually interact and ask questions as we go along. I have an Instagram account also. I've got a TikTok account. I've got a Twitter, which I don't really use that much, but I'll get involved in it hopefully in 2023. Anything else you need, share it, subscribe, comment, pass it on with friends. Let's get the channel going. It's been great talking to you. I want to wish you a happy 2023, successful one, a wealthy one, a healthy one, and let's get out there and make some money, make some business. This is Meir Walensky with Driving Markets. Happy New Year.